Hello everyone, today we will be going over journal entry accounts that require adjustment. If you need a refresher on journal entries or debits and credits, be sure to check out our videos on them. Let's get started. There are 5 main accounts that require adjustment entries. They are prepaid expenses, which are advance payment of future expenses. These could include supplies or prepaid rent or advertising. Then we have unearned revenue, which is advance receipt of future revenues, such as rent or tuition. So these are anything where you have not completed the service, but you've already received payment for said service. And then we have accrued revenues, which are unrecorded revenues that have been earned and for which no cash has been received, which is very similar to unearned revenue, only we have completed the service, only we haven't received the payment for the service. And then we have accrued expenses, which are unrecorded expenses that have been incurred and for which no cash has been paid. So things like wages or interest, where we have experienced these expenses but we have not paid the expenses yet. So if you have workers that have gone through a couple of hours of work but have not received payment from you, that is an accrued expense. And then we have depreciation expense, which is the portion of asset cost recorded as expense each year. So when you buy a new asset, the depreciation is what has been used up of the asset that so far. Shown below are the initial entries and the adjustment entry for prepaid expense. Initially, prepaid expense will be debited because it is an asset and it is increasing. And you will credit cash because you are paying for the prepaid expense, so the cash will be decreasing. And that is also an asset. And then for the adjustment entry, expense will increase and will be debited because you are using up prepaid expense. And prepaid expense will decrease because it is an asset and it is credited because you have used it. So for unearned revenue, initially cash will increase because you're receiving payment for a service that has not been earned yet. And unearned revenue, which is a liability, will also be credited and will be increasing. So for the adjustment entry, we have completed our service and we have actually earned the revenue we have received initially. So unearned revenue will decrease and revenue will increase. For accrued revenue, you have completed a service but have not received payment yet. So there is no initial entry, but for the adjustment entry, accounts receivable will be debited and they will be increasing because accounts receivable is an asset, and the revenue will also be increasing. For depreciation, your initial entry is when you purchased your asset. So for the first line of the initial entry, you would be debiting the asset, which could be building, land, anything like that, and you would be crediting cash because you were paying for the asset. And then for your adjusting entry, you would debit a depreciation expense and then credit accumulated depreciation, which is a contra asset, so the credit is actually an increase instead of a decrease. The problem I will be going over is problem 31A on page 139 of Accounting by Warren, Reeve, and Duchak, 26th edition. The supplies account balance on March 31st is $5,620. The supplies on hand on March 31st are only $1,290. So this means that your supplies account is actually higher than what it should be. You've actually used some supplies. So supplies expense will be debited for $4,330. And I got that from taking the $5,620 minus the $1,290. And then we will credit supplies for also the $4,330. The unearned rent account balance on March 31st is $5,000, representing the receipt of advance payment on March 1st of 4 months' rent from tenants. So on March 31st, we have a rent account for $5,000, but we've only actually earned $1,250, which is 5,000 divided by 4. So for B, you have unearned rent is being debited, and that will be for the $1,250. and then revenue will be credited for the $1,250. C. Wages accrued but not paid at March 31st are $2,290. This means that you will debit wages expense for $2,290, and wages payable will be credited also for the $2,290. Fees accrued but unfilled at March 31st are $16,825. This would be a debit to accounts receivable for $16,825 and a credit to fees earned for $16,825. Depreciation of office equipment is $4,600. This would be a debit to depreciation expense of $4,600 and a credit to accumulated depreciation for $4,600. This has been our video on adjustable entries. Thank you.